Hello there, I am your host Alex, and welcome to The Explainer. Today we're going to dig into something pretty cool, the story of a regular guy, a Canadian named Adrian Barr, who became a self-made millionaire. We're going to see if his path is something, the rest of us can actually follow.
And this right here is the core of his whole message. He achieved a seven-figure net worth not because of some magic formula or secret stock tip, but just by sticking to some really simple, repeatable habits. So let's dive in and see what those actually are.
Okay, let's just get right to it. The big number we're all here for, $1 million.
And get this, that was his net worth by the time he was just 31 years old. And he did it all while working a pretty normal, a good tech job. So the million-dollar question is, literally, how on earth did he pull that off? All right, so we're going to break his whole journey down into 5 main parts. We'll start with the foundation, which is all about saving, then get into his investing pillars, the reality of wins and losses, the actual tools you can use, and finally, wrap it up with the millionaire mindset.
Okay, Section 1, the foundation, extreme saving. The subtitle here says it all. It's not what you make, it's what you keep. And honestly, this is the absolute cornerstone of Adrian's entire strategy. It wasn't about making a crazy high salary, it was all about being super aggressive with cutting his expenses.
So how did he do it? Well, he made one huge sacrifice. For his entire 20s, he lived with roommates in, let's call it, student-style housing. Now look at the numbers here. The difference in what he paid for rent versus what most people pay is just staggering.
And he's totally honest about it. He admits it wasn't glamorous at all, living in dingy basements. He said he hated it, but, and this is the key part, the financial payoff was undeniable. We're talking an extra $2,000 every single month that he could then put to work for him.
So that brings up the next question, right? Where did all that saved money actually go? Well, it went into a really straightforward investing strategy, one that's built on 2 pretty simple fundamental rules.
Okay, so pillar number 1, focus on the long term. This means only investing money you know you won't need for at least 5 years, probably more. It's all about ignoring that day-to-day market noise. And pillar number 2, and this is so important, diversification. Basically, never put all your eggs in one basket. You got to spread your money out across different companies, different industries, even different countries. All right, Section 3, the reality, wins and losses. And this is where that second pillar, diversification, really shows its worth. Let's be real. Even with the best strategy in the world, not every single investment is going to be a home run.
So let's look at one of his biggest wins. We're talking about NVIDIA. He actually bought this stock way back in 2017. Now, because he was working as an AI engineer, he had this inside track, this industry knowledge that helped him see its potential way before most people. And the result, an absolutely staggering 750% gain. Just incredible.
But, and there's always a but, right? He also had some pretty significant losses. For example, he invested in a company called Allied Properties, which is a real estate company focused on office space. And his timing, well, it couldn't have been worse. He got in right before the pandemic hit.
And you know what happened next? Just a year later, bam, COVID hits. Everyone starts working from home, and, office real estate took an absolutely massive beating. Talk about bad luck.
And this is the whole point. This is so crucial. The reason he still came out way ahead is that his winners, like NVIDIA, more than covered his losers. Why? Because his money was spread out. It wasn't all riding on one horse. This is the real-world power of diversification. It's your safety net against the stuff you just can't predict.
Okay, let's get practical. Section 4, the toolkit, your first step. So how do you actually put this into action? For most beginners, the very first question is just, where do I even put my money?
Well, for Canadians, Adrian lays out a really clear roadmap for choosing between the 3 main registered accounts you'll hear about: the FHSA, the TFSA, and the RRSP.
So his number 1 pick, if you're planning to buy a home in the next 15 years or so, is the FHSA. He calls it a powerful hybrid account because it kind of gives you the best of both worlds. You get a tax deduction like an RRSP, and you get to withdraw the money tax-free for a home just like a TFSA.
But what if you're not buying a home, or you already own one? Well, for pretty much everyone else, he says the TFSA is a total no-brainer. It's super flexible and has basically no downsides. The RRSP is also a great tool for sure, but it's a bit more powerful for high earners who think they'll be in a lower tax bracket when they retire, so it requires a little more strategic thinking.
All right, let's bring this all home. Section 5, the millionaire mindset. So what's the big takeaway from Adrian's entire journey? It really all boils down to a pretty simple but super consistent mindset.
It really comes down to these 4 cornerstones. First, you've got to live below your means. Simple as that. Create that gap between what you earn and what you spend. Second, you have to be consistent. Invest that gap, that extra money, every single month, whether it's a little or a lot. Third, be diversified. We've seen how important that is, right? It protects you from the unexpected. And finally, you have to be patient. This is a long game. You got to focus on the long term and just let time do the heavy lifting for you. These 4 things, done over and over, that's what built his $1 million net worth.
And you know, ultimately, it's all about changing how you think about saving. It's not about restriction. As Morgan Housel says, every single dollar that he saved was a dollar for freedom in the future. You're not giving something up. You're literally buying your future freedom.
And that really leaves us with one final thought. It doesn't start with saving thousands of dollars. It starts with just one. So the question for you is, where will you find yours? What's your opinion on this? Share it with us in the comments section. Thank you for watching.